World is on edge. Financial markets are shaky, and the tension is palpable. There's a feeling in the air, a sense that something big is about to happen. It's as if the very atmosphere is charged with anticipation. Many experts, myself included, believe we're on the verge of a financial crisis even worse than the one we saw in 2008. The signs are all there, and they are impossible to ignore. Remember the fear and uncertainty of that time? The sleepless nights, the constant worry about what the next day would bring, the lost jobs, the homes foreclosed, families torn apart by financial ruin. This time could be even worse. The economic landscape has changed, and the stakes are higher than ever. The warning signs are flashing red. Everywhere we look, there are indicators of impending trouble. We see them in the stock market's wild swings, the volatility that seems to have no end. The rising cost of living is squeezing families, making it harder to make ends meet, and the growing mountain of debt is a ticking time bomb, waiting to explode. It's a perfect storm brewing, and we need to be prepared. The convergence of these factors could lead to a catastrophe. We need to understand what's happening and what we can do to protect ourselves. This isn't about fear-mongering, it's about facing reality. It's about being proactive rather than reactive. It's about taking control of our financial futures. We have the power to make informed decisions that can safeguard our well-being. The first step is understanding the problem. Let's dive in. Let's explore the causes, the potential impacts, and the strategies we can employ to weather this storm. Knowledge is our best defense. Remember 2008? The housing bubble burst, banks crumbled, and the world plunged into a recession. Millions lost their jobs and homes. It was a financial earthquake that shook the world. Today, we see eerie similarities to that time. The housing market is showing signs of overheating again. Debt levels are sky high. The stock market seems disconnected from reality. It's like we're replaying a bad movie, but this time, the stakes are even higher. Back then, it was subprime mortgages. Today, it's a different breed of risky lending. We see it in student loans, auto loans, and even corporate debt. It's a house of cards waiting to collapse. The warning signs are all around us. We just need to open our eyes and ears. The stock market is like a roller coaster with dizzying highs and gut-wrenching lows. That kind of volatility is a clear sign of instability. Then there's inflation. Remember when a gallon of gas cost a fraction of what it does now? Or how the price of groceries seems to go up every week? That's inflation eating away at our hard-earned money. And let's not forget about the debt. Governments around the world are drowning in it. Corporations are taking on more debt than ever before, and individuals are struggling to keep up with their credit card bills and student loans. This mountain of debt is a ticking time bomb. Debt is the elephant in the room. It's a massive issue that everyone knows about, but few are willing to address head-on. It's the biggest threat to our economic stability. The stock market can be volatile, and when it takes a nosedive, the ripple effects are felt everywhere. Governments are spending more than they take in, racking up trillions in debt. This isn't just a national issue, it's a global crisis. Politicians argue and debate, but the debt clock keeps ticking. This can't go on forever. The ticking clock is a stark reminder that time is running out. Financial bubbles are forming and they will burst. Eventually, something has to give. When the bubble bursts, it won't just be numbers on a screen, it will be real people, real lives affected. Corporations are also loading up on debt, using it to buy back their own stock and boost their share prices. This practice inflates stock prices artificially, creating a facade of financial health. This might look good on paper in the short term, but it's a risky game. Financial analysts are stressed, knowing that this house of cards could collapse at any moment. What happens when interest rates rise or profits decline? The cost of borrowing increases and suddenly those debts become much harder to manage. And then there's us, the average Americans. We feel the pinch in our daily lives, struggling to make ends meet. We're bombarded with offers for credit cards, loans, and financing plans. It's a constant temptation to spend money we don't have. It's easy to fall into the trap of living beyond our means. The allure of instant gratification can lead to long-term financial pain, but every dollar we borrow today is a dollar we have to pay back tomorrow, with interest. The cycle of debt can be hard to break, but it's crucial for our financial future. Section 5. Inflation, the silent thief. Inflation is like a thief in the night, silently stealing the value of our money. It creeps in unnoticed, eroding the purchasing power of every dollar we earn. Remember when you could buy a candy bar for a nickel? Those were simpler times when a small coin could bring a moment of joy. Those days are long gone. Now that same candy bar might cost $1 or more, a stark reminder of how inflation has changed our everyday lives. Today, thanks to inflation, that same candy bar might cost $1 or more. inflation is insidious. It doesn't just affect luxury items, it impacts the cost of basic necessities. It erodes our purchasing power, making it harder to afford the things we need. Groceries, gas, and even rent become more expensive, stretching our budgets thin. It's especially tough on people on fixed incomes like retirees. They often have to make difficult choices, cutting back on essentials to make ends meet. Their pensions and savings don't go as far as they used to. What once seemed like a comfortable nest egg now feels insufficient. The Federal Reserve, our central bank, has been trying to tame inflation by raising interest rates. This is a common tool used to cool down an overheating economy, but it's a delicate balancing act. The goal is to slow inflation without stalling economic growth. Raise rates too quickly, and you risk triggering a recession. Businesses may cut back on investments, leading to job losses and economic downturn. Don't raise them enough, and inflation could spiral out of control. Prices could skyrocket, leading to a loss of confidence in the currency and economic instability. It's a challenge that affects us all, from families trying to budget to policymakers striving to find the right solutions. Understanding inflation is the first step in protecting our financial future. Section 6. Housing Market Jitters. The housing market is another area of concern. Prices have soaring in recent years, fueled by low interest rates and a shortage of inventory. But what goes up must eventually come down. We're already seeing signs of a slowdown in some areas. Mortgage rates are rising, making it more expensive to buy a home. And with the economy slowing, some potential buyers are getting cold feet. A housing market crash would be devastating for millions of Americans. It would wipe out home equity, lead to foreclosures, and send shockwaves through the economy. Section 7. The average American caught in the crosshairs. So, what does all this mean for the average American? In a nutshell, it means we're facing a perfect storm of economic challenges. Inflation is eating away at our paychecks. Rising interest rates are making it more expensive to borrow money, and the stock market is on shaky ground. Many families are already living paycheck to paycheck. They don't have a lot of wiggle room in their budgets. A financial crisis would be devastating for them. They could lose their jobs, their homes, and their savings. It's not just about money either. Financial stress takes a toll on our mental and physical health. It can lead to anxiety, depression, and even relationship problems. Section 8. Patrick Bet-David's warning. A call to action. I've been warning about this for years. The writing is on the wall. We're heading for a financial crisis, and it's going to be worse than 2008. But this isn't the time to panic. It's the time to act. We need to educate ourselves about the economy and the financial markets. We need to get our financial houses in order. And we need to demand better from our leaders. This isn't about being a pessimist, it's about being a realist. The more prepared we are, the better we'll be able to weather the storm. Section 9. History repeats itself. Lessons not learned. The sad truth is that we haven't learned the lessons of 2008. We've repeated the same mistakes, only on a larger scale. We've allowed debt to pile up. We've turned a blind eye to risky lending practices. And we've failed to address the underlying problems in our economy. Albert Einstein once said, "The definition of insanity is doing the same thing over and over again and expecting different results." We're on the verge of repeating history, and it's time to break the cycle. We need to demand better from our elected officials. We need to hold them accountable for their policies, and we need to make sure they're putting the interests of the American people first. Section 10. Preparing for the storm, what you can do. So what can you do to prepare for the coming financial storm? First and foremost, don't panic. Knowledge is power. The more you understand about the economy and the financial markets, the better equipped you'll be to make informed decisions. Second, get your financial house in order. Create a budget, reduce your debt, and build an emergency fund. The more financially secure you are, the better you'll be able to weather any economic storms. Third, diversify your investments. Don't put all your eggs in one basket. Consider investing in a mix of stocks, bonds, real estate, and other assets. Section 11. A glimmer of hope. Navigating the future. The future may seem uncertain, but it's not all doom and gloom. There's always hope. Even in the darkest of times, there are opportunities for those who are prepared. This is a wake-up call. It's a chance to take control of our financial futures and build a more resilient economy. It's a chance to learn from the mistakes of the past and create a better future for ourselves and our children. The storm is coming. But with the right preparation and a positive mindset, we can weather it and emerge stronger on the other side.